Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning. Welcome back to the podcast Become Sensible. So today we talk about one of the things that I think make many business owners and even now we as accountants become sleepless these days. That is because 13 or 14 days to the tax due date. And when we say the word tax in this season, in this time of the year, may induce a lot of anxiety. So I think there's a couple of things that I want to help you to have a checklist. If you run a business that make like couple $100,000, like $700,000, or you have income that come every single year, that is like your taxable income around couple $100,000. Start from there. Here is the checklist that will help you to get your tax return released in the way that less answers for you. So number one, start with the financial document organization. So if you listen to the podcast, you know that we always mention about the importance of having your tax document or your financial records organized. But start from the basics. Number one is what is your prior year tax returns, all the business bank statement, credit card statement, payroll record, W-2, W-3, 1099, 1096, assets, purchase and sale records, vehicle logs, if you claim auto expense, and home office documentation if applicable. So one of the things is we always ask a prior year tax return for reference. The reason why is if your tax is complicated, on that previous year tax return is have the records of like if you have rental property, will have a depreciation schedule on that, or even your business will have a depreciation schedule. And those numbers are very important because if we don't have those records, it's very hard to do the depreciation for 2024 correct at all. So you always need to have a copy of that previous year tax return. The next one is like all of the business bank statement, credit card, and record of payment. This need to be like all together. So otherwise, sometimes you forget W-2, W-3, and sometimes you forget the 1099 that you pay for your contractor. And normally, should have a folder that by the tax year, all of these records put it together and it's organized so that it's so much easier for you to upload the document to your professional or your CPA to prepare for the tax. Number two, that review your revenue and your expense. Like for example, whether all of these show up on your profit and loss makes sense in terms of the business at all. Like suddenly you have $50,000 in depreciation, whether that is the thing that actually will happen, or you have a huge jump in terms of revenue compared to the previous year, you need to make the question mark to make sure that is correct. Because mistakes happen all the time, and there's one wrong mistake in terms of revenue or expense can create a lot of consequences in it. So then analyze what is the reason why that you have these unusual expense, unusual revenue, and have it like vehicle expense locked in. And whether you did last year, at the end of the year, you did the thing like Section 179 advances or any strategist tax move that you did at the end of the year, you need to make sure that you have those record on it. Number three, any strategy tax move. Last minute optimization strategy. Think about retirement contribution. Max out retirement contribution, consider additional retirement, review profit sharing option, any contribution for SSA account. Then on the business deduction, review equipment that you purchased on time. checks any bonus depreciation option, verify the home office calculation, whether footage is correct, whether the total rent is correct, whether your business insurance covers. And then the next one, and I don't think that this is, make sure that the entity structure was correctly. I absolutely see client coming in and they thought that they had a partnership return, but it turned out that when they register for any reason, legalism, something that register for them is turned out as a single member LLC. And so then when that happened, that the structure, anytime that you touch in the structure of an entity, it would have the tax effect on your situation. So make sure that, okay, you have a document that relate to that tax structure. You say, oh, I am an S corporation. Did you have the letter confirmation from the IRS say that you are an S corporation? You say you are a multiple member LLC. This your EIN letter say it at all. Because normally if you multiple member LLC and without an S corporation on your EIN letter would have that, okay, you filed the form 1065. That's so apparently indicated into a structure, formation structure document. So make sure that you actually have the document on hand to make sure that this is the thing that you think you have a that entity is actually that type of entity. Number 3 is make sure that your depreciation schedule was taken care correctly. One of the things that I see many business owners miss is, for example, if you buy a business, in terms of the valuation of the business because of the fixed assets go with this, because of the rent lease, the location, everything that's tangible assets is depreciation is one thing. But then the other thing is you also have is a intangible asset. And the intangible assets is what? It is the value that the branding or the brand name or anything that have intangible. It's not a fixed asset. It's called intangible assets. And intangible asset also can be amortization over the years. So that, for example, if you buy a business, it's $500,000. But in that, the fixed assets and any fixed thing, machine equipment and all that is worth $300,000. And then you have $200,000 that you pay on top of it. That become intangible assets in your business. And that need to be have amortization, which is the same way of depreciation, but it's for intangible asset. So this thing, have a document on hand and explain it to your accountant, because sometimes your accountant cannot understand all of this or didn't know all of the transaction detail or all of the transaction. So make sure that you have a document on hand. And that's, depreciation also can be game changers if you file your tax returns to make sure that you don't miss those things. And before you sign the tax document, have a conversation, sit down with your tax professional, sit down, go through your tax return, understand line by line on your tax return, and ask the right question. And if they don't actually sit down to talk with you for at least 30 minutes or explain for you, okay, what's make up this capital gain show up on your tax return, where it's come from, or is this what is make up the loss in your business? What make up those things? If they can't explain it, then it means that they wasn't very thorough into your tax return. And it's put you into the risk that your tax return wasn't prepared in the thorough way, and they may miss here and there K1 or 1099 or any information that's crucial for your tax return. So make sure that you have a conversation with them, sit down, ask the question and verify the information with them so that your tax return was prepared thoroughly. And then think about the recommendation for 2025 tax situation and what should you do to move forward in the situation. In this case, based on the information of your 2024. So one of the things we always do is when we sit with the client, we say, if they ask the question, hey, Fiona, my earning of 2025 will be this. What is the recommendation in terms of estimated tax, in terms anything else that I need to prepare? And that is where the recommendation will be super helpful for you. One other thing is in finance in tax, I always say that we need to know exactly where things are at in our business, in our finance, in our tax, so that we have the right strategy, the right action, and the goal that we set for is move in the right direction. So make sure that you understand it before you file your tax. And from here, keep a promise with yourself that you will never put yourself in the last minute of tax situation. And moving forward, you take more control, set aside the money for the tax strategy, tax planning, and tax liabilities, and more proactive. Don't wait until April to talk about tax. It should be a conversation at least 3-4 times per year. And I think that is all for the conversation today, the checklist, what to do before you file by April 15. And that is including make sure that you have all financial document records, essential records checklist. Number 2 is have a review, all of the expense, all of the revenue. Number 3, have a strategic move, the last couple strategic move before you file your tax. And finally, make the decision that you will take a proactive way in your tax situation. Thank you so much for your time today. And I cannot wait to talk to you in the next couple episodes. Bye-bye.